welcome to DBN Business News today. In the headlines, Nigeria's foreign debt rises, CBN withdraws 138 billion naira from circulation, Africa's poverty level drops, and China's economic growth drops to lowest level since 2009. Good to have you join us on DBN Business News today. I'm Seun Awosika. Now the news in full. Nigeria's external debt profile has risen to $11 billion as against the $9.4 billion recorded in March. The Director General Debt Management Office, Dr. Abraham Nwankwo, also put the nation's domestic debt profile at 11 trillion naira. Nwankwo, however, said the quantum of the debt did not really matter. He said the most important thing was how the resources were deployed to encourage economic growth, development, generate employment, and reduce poverty. The DG assured that Nigeria was in position to sustain the debts. Moving on, the Nigerian Employers Consultative Association has warned that the high rate of unemployment in the country is a time bomb that would explode anytime. NECO's Director General Seun lamented that the rising unemployment trend in the country portends grave danger. Oshinowo said government's projection on the economy was yet to synchronize with the reality, even as he faulted figures released by the Nigeria Bureau of Statistics. The NBS recently published new rates of unemployment for Nigeria's economy from 2010 to 2014 based on a new methodology, which suggested that the economy is almost at full employment. He therefore wondered why Nigeria continues to experience unemployment growth despite its rating as one of the fastest growing economies in the world. Still on improving the standards of living, and this time with a focus on security, creating a conducive and safe environment for business and housing for the general public, the much talked about poor facilities for the Nigerian police force may soon become a thing of the past, as the Nigeria Police Mortgage Bank PLC says it is working to transform the mortgage sector in Nigeria. Managing Director of the bank, Bola Adeboye, spoke to DBN Business News on the opportunities made available to Nigerians under this scheme.
We are more or less a specialized bank. Our target is aimed at providing sustainable housing development for Nigerians. So we are relatively wholesale in approach. We are relatively specialized in approach. We are not a commercial bank where everybody comes, open a savings account, opens a current account, wants to do open letter of credit, wants to do commercial on lending activity, wants to do intermediation and the rest. Okay. We are specialized to assist in providing houses, either by funding establishments, construction companies, developers who want to develop estates, or by providing loans, long-term loans for people who want to purchase houses, build houses, renovate houses, or buy land, etc.
The Central Bank of Nigeria will this week mop up a total of 138 billion naira from the system using the sale of treasury bills. This is of course in line with its liquidity management mandate. The mop-up is expected to be done through a primary market auction, and also 91 days, 182 days and 364 days instruments would be sold by the regulator. The central bank issues treasury bills to reduce the volume of money supply in the system in a bid to control inflation. Inflation rose to 9.4% last month, representing its highest level since this year. Moving on now, average yield on treasury bills fell sharply by 42% in 9 months from January to September, driven by influence of rising inflation and the pricing of fixed income investment. A weekly update of development in the nation's financial market shows that between January and October 2015, average yields in the T-bills have declined from 14.3% to 8.3%, as yields on bonds dropped from 15.3% to 14.2%. Factoring the rise in inflation within the period, average real return on investment also declined significantly between January and October 2015 from 6.1% to 1.7%. And stocks in the financial services and oil and gas sectors were the few exceptions to the decline that pervaded the Nigerian stock market last week as investors weighed the third quarter earnings of quoted companies. The benchmark index for the Nigerian stock market, the all-share index, indicated a week-on-week negative return of minus 1.10%. This is equivalent to a loss of 114 billion naira. The all-share index closed below its psychological base of 30,000 points at 29.8 points compared with the week's opening index of 30.2 points. We'll take a break now, take a look at figures from the stock market today.
Come, discover, learn, and network at Build Masex and Interior 2015. Featuring exhibitions and seminars on building, machinery, construction, and interior decorations. Date, October 20th to 22nd. Venue, the new Exhibition Center, Eco Hotel and Suites. Time, 10 a.m. to 6 p.m. Admission is free. Your host is Governor Akinwumi Ambode, Executive Governor of Lagos State, and special guest is Malam Nasir El-Rufai, Governor of Kaduna State, plus other notable speakers. This event is brought to you by Atlantic Exhibition and endorsed by NASIMA, NIA, NIQS, and EDAN. See newspapers and posters for details. Build Masex and Interior 2015. Exploring the present to create the future.
Media support from DBN Television, your choice station.
Welcome back. More business stories for you. Lagos State government has blamed the persistent gridlock on the Apapa-Oshodi and Lagos-Abeokuta Expressway partly on the failure on the road as well as the poor design of the road. Also, the state government claimed slow pace of work by contractors appointed by the federal government were some of the reasons for the delay in execution of pedestrian bridge projects across the state. Permanent Secretary, Ministry of Works and Infrastructure, Ajibade Bade Adebowale, and the General Manager of the Lagos State Public Works Corporation, Ayo Shodeinde, made the claims while addressing newsmen. The state government, however, reiterated its commitment to finding a permanent solution to the gridlock, which causes a loss of millions of naira every month. Moving on, a new World Bank report has put Africa's poverty rate at 43%, compared to a previous figure of 56%. The World Bank Vice President, African Region, Mr. Makta Diop, gave the figures during a video conference on End Poverty Day. Diop stated that the latest estimates came as good news in the context where we have decay of solid growth in Africa averaging 5%. He said the report, representing the most recent poverty data available, and seeks to highlight the need to know the determinants of poverty in Africa. The World Bank Vice President, however, said much of the progress in poverty reduction came from the non-income dimension of poverty, which witnessed improvement in literacy and child mortality rates, as well as increase in life expectancy in the continent. Now, China's economic growth dropped below 70% for the first time since the global financial crisis on Monday, thereby raising pressure on Beijing to further cut interest rates and take other measures to stoke activity. The world's second largest economy grew by 6.9% between July and September. The Nation Bureau of Statistics said the figure is slightly better than forecasts of a 6.8% rise, down from 7% in the previous 3 months. Despite the spate of easing, Monday's GDP reading was still the worst since the first quarter of 2009, when growth tumbled to 6.2%. And now let's take a look at Asian shares now. Shares held 2-month highest level on Monday as a batch of Chinese data showed the economy slowing while still managing to reassure investors it was not in danger of some hard landing. The dollar also slipped as investors took profits. MSI's broadest index of Asia-Pacific shares outside Japan bounced around in a tiny range on Monday in the wake of the China data. It was last up 0.1% and on track for its monthly performance since February 2012. Japanese shares N225 edged 0.5% lower as Australia's rose 0.1%. Greater China shares were having a mixed day, with mainland stocks rose 0.5% as Hong Kong shares slipped 0.3%. Alright, in commodities, prices stabilized after a recent rise as investors took profits from recent gains. Oil prices edged up in early trade on Monday, extending a rebound on Friday after almost a week of declines. Brent futures were $50.27 per barrel. The figure represents a 0.3% from late US levels last week. And that's how we wrap it on DBN Business News today. Thanks for watching. I am Seun Awosika.